What's up, everybody? Good afternoon. Had a little bit of technical things we had to take care of before we got started, but we have a wonderful show lined up today talking about the charts, what's going on in this price action. Not only Bitcoin, there's some broader things at play too that we need to be paying attention to. What are they? And who's going to give us that answer? I can't be the only person that's giving you this information. We got to have broad range of people that we listen to, broad data points that we draw from. We got to have people that contradict our thoughts. We have to dive into all these different things. So everybody in the chat right now, throw a 1 in chat if you're feeling grateful. Throw a 2 in chat if you're ready to just get this going. We can just get this darn intro out of the way. My name's Kellam. Welcome to the BitLab Academy daily stream. And by the way, hit that like button. Hit that subscribe button, ding the bell. We got a wonderful guest today. Before we dive in, I just want to say, make sure you head over to the BitLab Academy. I forgot I restarted my computer. Head over to the BitLab Academy page. Boom, right there. Make sure you're following us here at Academy BitLab. And without any further ado, I just want to say welcome to our wonderful guest, Mr. Christopher Inks. How you doing, good sir? How you feeling? Thank you for being here.
What's going on, man? I think I'm probably doing better than most. It's been pretty, I don't know, annoying, I guess, for most traders here with Bitcoin going sideways for almost 6 months. But, just zoom out to the bigger picture and life isn't too bad, right?
You know what? It's not bad at all. And especially the more prepared you are, the less concerned you are with small things happening in price action. And why do I say small things when we just had this major pump yesterday? The question is, Chris, do you feel like the pump yesterday means that it's all bull from now and we're all going completely up and away from here? Or what should we be looking at? How are you looking at the market right now? Are we still in a bear market? Are we in a bull market? Are we into, like, what's your thoughts?
Nah, man. I mean, forget everything. Forget the fact that we were a year down. It's November, December. We're finding the lows like we always do. With Bitcoin. But just looking at the structure coming off the lows, I mean, it does appear to be accumulation. And even this real pain in the butt kind of pullback right now still looks to just be a stair-step reaccumulation, or what we call a back up the edge of the creek in Wyckoff. Which is just basically a pullback to previous resistance as support before it goes out higher. So, I mean, for me, we're still 55% off the lows. We rallied up 100%. I mean, it's been almost a year. It's hard unless you haven't been through a lot of market stuff. It's hard to really say that this is a bear market. But a lot of people kind of want to look at that, the idea that you get higher, new all-time high as a final bull market. But for me, the bull market began there already, and we're just big picture, just pulling back locally right now before we likely push out higher.
I completely agree with you there, and I just want to throw everybody really quick. I'm going to throw it back over to my screen here. Make sure you're following Christopher Inks right here at TX West Capital. He is a wealth of information. He breaks down content on a daily basis. He teaches courses. He understands market psychology, and I couldn't be happier to have him on. So, Chris, we're both Texas boys. I was in New York. Now I'm in Atlanta. I'm kind of recapturing some of that southern pride, in terms of like just life, And
yeah.
But you markets, what are you looking at right now? Say you're a Bitcoin and maybe a couple top altcoins sort of holder, or it doesn't really matter what, just something in the digital asset ecosystem. Although you're invested in Bitcoin and other digital assets, what are broader things that you're looking at right now that are helping give you some indication, some edge? Because that's truly what everybody's trying to find, whether or not they know it, trying to find that edge so you can get into or out of trades for the most of the meat of a move. So what are you watching?
Yeah, man. So, the biggest thing, I mean, I've been around for quite a long time, so I've learned a lot of different styles and methods and theories of trading. Most often I'll use Elliott Wave and Wyckoff and some price action, but really, it's that price action and volume, especially when learned through the lens of the Wyckoff method, which is an understanding of ranges and large institutional movement. I think that's the edge. I think that's what it is, because, the reason why we push that so much is because the one thing that your big professional players can't hide is their footprint. They have to come in with substantial size, and they can try and slow it down as much as they want, but you're going to see it. It's those big spikes in volume that you see at the highs and the lows. Those aren't your your run-of-the-mill retail traders. And so once you really kind of learn to to look at that appropriately, It doesn't mean you'll always get it right. I mean, we're human beings. We're going to make mistakes, right? There's no guarantees in trading other than you're going to lose money from time to time. But I'm telling you, man, I don't care how people trade. If you learn price action and volume, that analysis together, especially again through that Wakofian lens, I think it just puts you eons ahead of everybody else, because then you're buying at 15.5, you're buying at 16, you're buying at 18, rather than saying, oh, it's got to go down further, it's got to go, as it rallies up 100%. Worst case scenario is maybe you're not correct on the big picture about it being accumulation, but man, you got down there at 15.5 or 18,000, and you rallied that thing up to 31. I mean, the goal is to make money. So, I mean, at the end of the day, I think that's probably the biggest edge anybody can have, honestly.
No, I hear that. So we're talking a little bit in terms of the conceptually these practices. Are you willing to open the books? Show us your charts. What are you looking at? What are we don't need to put a number on it, but I'll just throw it out there and we'll see if we hit it. What are 3 or 4 different things that you're tracking right now, along with Bitcoin and altcoins? But what are things that you're tracking to help give you that edge? And are there any setups you're seeing that are bucking the trend, or are you just looking for lower price action? I'll let you kind of take over the show from here and give us a breakdown of these markets, man.
Okay, yeah. So the first thing is so Bitcoin has to do this because the risk on. At the end of the day, your markets are really all separate. Now, when people look at the DXY, the dollar index there, the best way to look at that is you're looking for general trends. You're not looking for, oh my God, today at 2:30, the DXY was rejected, came down, so risk assets have to go up all of a sudden. You're gonna, because what you'll notice if you zoom out, you'll notice there are times at which the DXY is rallying and risk assets are rallying, or coming back. So it's really just what is the bigger trend going on there. So I like to kind of keep up with that a little bit. I was that guy down at 89 that said, okay, guys, looks like a bottom here around January 5th of whatever that was, 2021, 2020, whatever it was.
Yeah.
And I gave the 114, 115 target, and that's what we hit, and we've come down from that down to 100 now. I've got a couple looks on it. I think it's going to head down further. I think it's, 5 waves up, it's topped out. But, I think when you're working through it, one of the bigger things you can have as a trader is this understanding of validation and invalidation level. So no matter how you're trading, there should be a level that logically, according to the way you trade, that if you break through that, all of a sudden, what you thought was happening is no longer happening, and you let it go. You say, okay, well, my thesis for the reason why I was getting in the trade is this, and that didn't happen. Instead, it went the other way through the invalidation level. So now I need to go ahead and get out of the trade, because I think what traders do is they hold on to their losers too long, or they keep trying to hope themselves into some kind of winning position. So we kind of look at the dollar as just like a general idea of where maybe risk appetite is. But at the end of the day, your Bitcoin market, your stocks, your gold, whatever it is, they're all their own markets. So, I'm not one of those people that says, okay, well, news event says this has to happen. News events are usually a temporary thing. They don't usually affect the overall trend. And when they happen to coincide with an overall trend change, it's because it was already coming in. So, as you go through this, like I said, I look at the dollar there as what it's kind of doing overall, but really each market I kind of run individually. Now, that said, what I did say was when we got to that October, November, December, depending on which market you're looking at, whether it's crypto or it's stocks or whatever it is, I did mention that what we needed to see was the breakout above the mid-August 2022 swing high. And so that was Bitcoin, that was the S&P, that was the Dow, that was everything. Now, the Dow did it in, I think it was like January. It went up there pretty quick. And it took, quite a few more months after that before the NASDAQ and the S&P did it. But they're all above that. That was the key part. Why? Because that's a 3-wave move down, and 3 waves are corrective. So when you break back up above that second wave, it locks it in as a correction. So now, does that mean it has to go up and make a new all-time high all of a sudden? No, there's a couple of different ways corrections work if you understand Elliott wave theory. It could be one huge kind of triangle that just kind of plays out, which would drive everybody nuts, because as traders, we know that the worst thing to do is to sit there while price just moves sideways. So for me, if we're doing sideways, for instance, here on Bitcoin for the last 6 months or so, and then we get this push down yesterday or the previous day there, and then this rally back up. It looks good right now. And there's a lot of reason, depending on how you're looking at it, whether it's Elliott Wave or Wyckoff or something, that says that maybe that bottom could be in. But you've got to break out through levels. You've got market structure. You've got this bearish market structure coming off, your swing high there back for Bitcoin. That was what? That was mid-July. So, you have to break out of a lower high just to kind of say, okay, well, that particular bearish market structure is now, done for. But again, that doesn't guarantee we go up to a new high yet.
So is your primary thesis right now that we will likely, would you expect that we're still going to be tapping some liquidity below, low 24s into 23s? Or do you feel like right now we're literally sitting on an indeterminable plane that we just really need to be risk managing whichever direction it breaks?
Oh, for sure. Yeah. I mean, the one thing that separates you from the people that are losing money day in and day out is proper risk management. I mean, that's key. And especially right now, it doesn't have to break down below, what is that? That's the mid-June swing low there that we're almost there. Or I think on some exchanges, it might have actually broken down a little bit. But if it hasn't yet, it doesn't have to. It could. And like you said, it could head down there toward 24,000 or even a little bit further. But again, if you're zooming out through a Wackovian lens, really it's just with this 6 months range, it ends up being potentially a spring, which is just a quick move down and then a rally back up into the range. And so if we get that, I mean, you should be looking to likely go long, at least mid-range, if not top of the range. And, but the likelihood is you're going to break out higher, above that 32,000 area. But right now, with it just kind of bouncing right there at that area, I would say the biggest thing is just to kind of use that real proper risk management. Don't just jump in and think it's got to go up. It doesn't have to. Price only has to do whatever it's going to do.
What's crazy to me is, and I know the data is available to everybody, and some people aren't aware that the data is there. And even if they are, they get confused as to which data to look at. But yeah. Tuning into this show, BitLab, everybody that's here in chat, shout out to every one of you right now, especially with how frustrating the market's been. A lot of you are here every day, and you watch other channels. You watch Chris here, you watch Frankie Candles, you watch CryptoFit. But at the end of the day, one of the things I think everybody is trying to convey in these times is, one, you can't catch up to somebody else's trading. You can only trade against yourself. One. That's right. Number two is we can see the data, whether or not you're finding it or you're tuning in and watching me talk about it. But, yesterday we had almost $70 million in longs liquidated. And then very, very soon after that, about $30 million in shorts liquidated that actually caused a nice little short squeeze. But everybody's so excited about, $800, $900 pump. And I showed everybody this morning on the BitLab stream, zoomed out on the daily. If you're looking across a year or two, you can't even see that there was a pump. So if you cannot see that there's a pump and it's clearly not breaking any levels, nothing structurally has changed. So why don't we zoom into your chart and whether it's Bitcoin, Ethereum, do you have any altcoins you're looking at? Like, are you?
Yeah, I've got the one everybody loves. Hey, Saul.
What's that? Saul. Yeah.
That's all. I've got a few others in there, but yeah, I mean, so Bitcoin here real quick. I mean, this continues to be the same thesis I've talked about. Anybody that's been with us at TWC knows that I kind of rushed home from the movie theater back where I've got that SC, that selling climax in June of last year over here. And I was kind of on my way home. I take my son to the movies and happened to look at my phone and said, oh my gosh, we've got this. It looks like we might be getting some sort of bottoming going on. Got in there. And I traded it live with our members and I screwed up the first trade, which is fine. I was trying to catch the low there, but ultimately talked about the idea of what we're seeing here, which is in Wackovian, the way we look at it, this actually begins your accumulation structure over here, right? And so you actually have accumulation that runs from, back there, that June of 2022 to back over here to around whatever that is there. It's March of this year, whatnot. I mean, this is all accumulation. Isn't this little thing down here? This is some people in price actually call it a deviation, right? Really, it's a terminal shakeout. It's that final kind of scare people out of whoever's got, because in the range, you get the lower highs and the lower lows, which tells you there's still too much supply in retail's hands. And this is meant to freak them out and to scare them out. And it does. And anybody who was following me at that time, I described exactly what all happened through here on this breakout and everything else, because it just follows in with what we generally expect in terms of a Wolffian structure, accumulation structure.
And Chris, one of the things I find interesting about that same part that you just talked about, potentially being a deviation or a terminal shakeout, and it's a mechanism that happens in every market cycle near a bottom, and people want to say, no, that's because of FTX. Well, what FTX wasn't around in the last cycle when we had a bottom, that the bottom fell out. Something always happens when the pressure's on. You're never going to know what it's going to be before it happens. You'll start seeing signs. The chart will start indicating what it is. But at the end of the day, it doesn't matter what the mechanism or thing is that makes that final drop happen. The point is knowing structurally that it is more likely than not to happen at some point near a bear market bottom.
Yeah. I mean, perfectly said, man. I mean, it is what it is. I'm not a firm believer in news events and whatnot. I believe all the information is already in the charts because people vote, for what the charts are going to do with their money, right? I mean, it's the closest thing. Financial markets are the closest thing we have to human sentiment, to what the social mood is. And so if they believe that things are going to be okay, they're going to put money into the markets. If they're really fearful of things, they're going to take money out of the markets. And so if you look at it that way, it gives you a little bit different lens of which to look through the market and, expectation of movement. But again, as I said, we're human beings. We won't always get it right. We're going to get it wrong sometimes. That's why risk management is so important. But, again, you're going to have your lows. You're going to have your accumulation. Your highest prices, your lowest prices are events. I know, a lot of newer traders, they always talk about this being the top or the bottom, but those are events. Your ranges, you usually get ranges at the tops and ranges at the bottoms, your distribution, your accumulation. That's what you should be aiming for if you're trying to get in on a cycle, right? So, it's not a terrible thing if you're getting in anywhere, in here, even if it drops down here, if you're looking at this larger cycle, because the idea is if you're correct and this is accumulation, then, you're going to continue up. So, we get that there. And again, it just puts it up to this idea here. Can we drop down to, to 23, 24? Sure, we can. But in the terms of this, it just becomes basically probably not even a terminal shakeout, maybe just a spring, which is lesser volume coming in on it. And if we do, I mean, for me personally, I'm looking right here at the daily S1 pivot. That's right there around 24.1. That would be my initial target if we were to drop through, and then obviously get down there towards 23. Or even the low volume node here.
So on your chart, are you, and I'm guessing just because I know successful traders just by talking to them, I can tell that they have an idea what's going on. I could assume that you have a larger portfolio that's longer term, that you don't touch at all. You probably add to over time, but then there's a trading portfolio that you have as well. Are you trading on any sort of 4-hour daily, 1-hour time frame on Bitcoin, for instance? If it breaches below 24.6 or something like that, are you taking a short, or are you just looking at this with long-term goggles because we're coming into the next halving and looking at opportunities only to add on levels that drop, or are you actually shorting still?
No. Actually, I'm not even shorting. And I wouldn't short on a breakdown there because, again, my thesis, my idea for what's going on here is it would be just a spring or a terminal shakeout. In which case, then, a lot of times they can move really fast, and I like to sleep, even though I don't get a lot of it. I'm not in front of the computer 24/7. I try not to watch it on my phone too much. I try to get, some time away. So for me, the overall trend is up. So I'm looking for reasons to buy rather than reasons to sell. As a trader, the more you can focus on the directional trend, the more successful you'll be. Now, if you're down on, the 1 hour, the 4 hour or something, maybe you'll be paying attention only to this, but really that overall trend is up there. And then, like you said, we're looking at the longer term idea, right? What's going on, having coming up, new all-time highs likely, stuff like that. So for me, it doesn't make a lot of sense to short. I mean, if you were shorting here, I mean, it takes you how long? It takes you 3 months just to get, just to get down 10, 15%.
Well, Chris, not only that, looking at this chart, the interesting thing about this, because people ask me, I did this post, I think it was August 4th, that I had sold a significant portion of my trading portfolio. And there are some people commenting, you know, oh, wow, I'm buying from you because it's only going up. And it's like, and then other people also commented, well, why are you, did you sell or are you shorting? And my argument with that was, no, I sold, I did not short, because if you look at your chart, you know, you have the breakout right at the beginning of the year after the FTX crash accumulation. We had that large, very, very quick bullish expansion to the upside. And then it rounded off and kind of sold off, it trickled down, and then a very quick expansion to the upside. And then it trickled down, and then the BlackRock, very quick expansion to the upside. So the problem with being at the start of a potential very strong bullish trend, if you do get on the wrong side of if you're shorting when the potential for the next bullish expansion could be coming in any minute, really. It could be a minute from now. It could be a month and a minute from now. There's no way to tell. But when it happens, there's little time to have any reaction. So even if you have risk management in there, your risk management and it may not even get filled, depend on the liquidity of that asset and how quick it moves. So to me, I'm like, no, I'm selling spot position. And if it drops, you know, in this case, most of the assets I sold are down anywhere from 17 to 35%. So I didn't have to do any work to have 35% more capital available towards the purchasing power towards whatever assets I want to scale back into or pivot entirely. So it's a really, really good point you bring up there.
No, yeah. And I love the, you know, again, you're kind of just seeing things the same way I am, which is, you know, you want to be, even if you're trading shorter time frames, you still want to understand what are the larger time frames. You know, if you're trading, you know, the 1 hour, the 4 hour, you got to understand what your daily, weekly time, you know, kind of trends are, and then your bigger one, because a lot of times when you're on a smaller time frame, it'll look like one thing, but if you zoom out, you go, oh my God, we're right at the end of a different thing, right? It'll look like it's rally, but no, we're at the end of a, you know, at a movement the other way. And so you know, emotions are hard in trading, and they really are. And you know, sometimes I say that and people get offended, but I don't mean it to be that way. You know, it's just the reality of it. It's tough. You know, we're human beings. Emotions are part of who we are. They make us human beings. But when it comes to the markets, they can be really difficult. And so then you're here on, you know, on crypto Twitter, some other social media, it becomes really difficult to kind of sometimes to make a decision, especially if you're new and you don't really understand markets and structure and why things are happening. And you know, and then you got different people. You got the biggest accounts shouting the loudest, and sometimes they're opposite of what other ones are saying. And man, it's tough. It's tough to be a trader. I can't even imagine trying to start today. I started almost 30 years ago, before the internet was this thing, right? So I can't even imagine how difficult it has to really be to start trying to trade today.
Well, you know what, Chris, there's a lot more information today, but that's a double-edged sword, because with the information is the majority of it is just noise. And, you know, I tune into different people's streams from time to time. And, you know, people I know like Tom Crown and Crypto Face and Frankie Candles, but then also something will pop up in my YouTube feed and I'll just be like, okay, who's this person? What's their thoughts? You know, I'm always curious to hear what other people's thoughts are. And I'll be watching for like 5 minutes and I'm like, I'll see how many people will be in the room. Sometimes it's 20, sometimes it's 200. And I'm like, this person doesn't have a clue what they're talking about. And so the person watching that has literally no clue thinks, oh, well, this person says this is a buy, they buy, and then they're completely SOL. That's why even anybody, all you watching today right now, I appreciate y'all being here, and I'm happy I can be a voice in your toolbox of things that gives you context on the markets. But my main goal here is to give you so much information, tools and skills and strategies and avenues to go find other information that you can build your own strategies so effectively that unfortunately you won't even want to watch them anymore because you got it all figured out. That's really the goal. I don't want to have people, you know, tethered to only being able to understand what's going on by watching this channel. Although it's an honor for people to be here. The goal is to get you on your own.
Yeah, for sure, man. I mean, I feel a lot of the same way. You know, you know, again, it's tough. It's tough. I'm not even gonna, you know, kid people about that. Trading, I always say trading is simple, but it's not easy, right? So really, it's just this movement between areas of liquidity, between these supply and demand structures, right? So you know, and resistance and support. But it's not easy because you are fighting yourself, especially in the beginning, the entire way, your emotional, your psychological state. And that makes it really tough. And so, when you get into situations like this, where we get this move off yesterday, and you've got somebody saying, okay, well, listen, there's a possibility this could be a bottom there because of this, and this. A lot of times it's hard because you'll have an emotional attachment, a recency bias to the move that's been down, since July. So almost 2 months here, we've been going down. Recency bias is hard to kick. It's hard to say it's going to go up, and then it goes up. And then as a trader, as somebody, your emotions come in and you're like, oh my God, I want to get long, but I'm scared to. And then it pops up. You're like, God, I should have gotten long. And then it keeps going and you're like waiting for a pullback. But you know how Bitcoin gets sometimes. I mean, it just continues to pump sometimes, right? Every cycle. So what I try to do is I try to give some areas to look at. So for me personally, if this low is likely in, we should expect.
Can you zoom in on that just a little bit? Just so people can see it a little more clear.
Yeah, let me get in there. So we do have this bullish divergence kind of coming off on this particular chart. This is the Bitcoin USD chart on Bitstamp. And then we have this potential bullish engulfing candle. This is the 21 EMA that's providing resistance. Now, we've done the first thing on this chart, which is the local resistance. We've popped out above it. But really, this, whatever chart you're on, right around the 27,100, 200 level should be a daily pivot. And what I want to see is an impulsive breakout above that. What do I mean? So impulsive movement are large candle spreads, large spikes of volume. So I want to see that through here where it closes above that. If we can get that, and especially above this, this 28,150 kind of area here, if we can do that, it's all but screaming that the bottom's in here and we're going to break out higher. So that's, ultimately, if we zoom out a bit, forget all the noise, that's the movement I'm looking for to kind of say, okay, well, at this point, we can start looking on a smaller time frame, maybe for a more local pullback to rally up and to break out higher. Until then, I'm cautious. I've noted, we've got this resistance coming down here. Again, we had the local resistance here, but, I'm really looking at this area as the key point to kind of say, okay, well, likely, more likely than not, the bottom is probably in, and we're going to get higher. But again, there are no guarantees.
Hey, you just outlined the same levels I outlined this morning on the stream. I said 28,000 is going to be the doozy. It's either we're going to get there and break through it explosively, or we're going to find a pretty hard, more likely than not, we're going to find a rejection somewhere between that region. My question is, on today's candle, we're still on the daily candle, obviously, until about 8 p.m. Currently, we have a bullish, and I try to tell people this on a daily basis, and I have to remind myself this. Every single candle is a brick and building a foundation of either building up or building subterranean, right? You're either building up or down. And so if this daily candle closes and we do get a bullish engulfing, do you think that gives any, is that going to really add much to a bullish possibility? Or is that still kind of somewhat inconsequential until we get above that, what is that, the 50 moving average, and then up into the 27s and 28s?
Yeah, so that's the 21 EMA on there, that red line. For me personally, especially because we're talking about the daily candle, it's a good start, bullish engulfing, but you're looking for that, can we get a pullback and then a breakout higher? That's kind of the steps that we want to see. We want to see a bit more confirmation. I know a lot of times, candlestick structures, are taught that, okay, this is a reversal structure. It's not really. I tend to look at them as pauses and potential reversals. And so, it pauses because if it completes like this, well, now we've got this bullish engulfing. Okay, so maybe it might continue up, but now we need to see some follow through to kind of give us added confidence on that. Because too many times, you'll often see these things, right? One of my biggest things I love showing is on this, if we zoom out to the weekly here. So we had this crazy candle right here on the weekly, right? We have this one right here. It's the week of December 12th of 2022 right here. And so this normally is taught to be a reversal candle. You got the large upper wick, you got a very small body almost at the low end there, right? But the way I teach it to people is, listen, it's potentially a reversal, but if you don't get any real follow through and instead price starts to rally back up into that wick, then most often that's just basically a clearing of the runway before price takes off, which is exactly what happened here.
Well, also in that same picture right there, that same zone, interestingly, from the breakdown of FTX, that big black candle, that red candle on most people's charts, following that, even with the price action going up, you see a decline in volume into that move, meaning there's not agreement and consensus across the space with price action moving up. And I honestly, let me know your thoughts on this. I honestly think the most overlooked thing in all of the indicator, we even have an indicator package we sell, and it's phenomenal. But despite that, take that out entirely. The free indicators are on the chart that is readily available to everybody. Volume is the most underutilized to confirm a trend or to deny the possibility of that trend continuing. And people just ignore it. Yeah,
no, exactly. Again, even though I trade certain ways, at the end of the day, my base is, volume and price action. And, but it's not even, I would even go as far as to say it's not just that, but most people who try to employ it don't understand what they're doing. Especially when you're talking in terms of the large structure where you're coming off the all-time high down, right? And so if I can help anybody here, listen to this. What you're going to have is you have your bigger professionals that are kind of, they don't make the market do what they want. They're testing the market. They're testing the market at all the times, especially in the ranges, to see if the market, retail, is ready to follow through one way or the other. And then they go with it. Okay, guys? So when you talk about manipulation, it isn't that your big players are making, the market do whatever they want it to. They just know, how humans react, and they know they've got these levels, and they test these levels. So you test them, especially in the ranges, at these highs and these lows, and you kind of see what the market's doing. But here's the thing. When you've got all this movement down here for a year, you have retail selling, all along the way here, kind of trying to buy along the way, right? And you've got the bigger players, selling into them at the tops of all these kind of ranges going across here. So what happens is by the time you're getting to the range lows where that accumulation begins, you're going to have your bigger players now ready to actually start buying up. And so what gets interesting is you start seeing these big spikes of volume, these larger wicks at the lows, and then you see this here. But even with this, you had big FTX news, arguably the biggest news coming down. We had other capitulations with Three Arrows Capital and Celsius and all that kind of crap, right? But FTX, arguably the biggest, baddest news. And yet we only fell, whatever this was, 10%, 12%, whatever right here, into a large spike of volume. So it's your bigger player sitting there with a catcher's mitt. What happens? You got this range going on, and you notice retail is not pushing up. They keep getting pushed down. They get lower highs, lower lows. You do this one move to scare them out, breaks down, they short right into your catcher's mitt. And now you're taking all that supply, all that retail supply off the market so that you can move up. And you don't need as much volume moving up either. So you're going to get this where you get the big volume here at the bottom, and it even dips down a little bit lower here on lower volume, and it rallies up on lesser volume. And people say, well, look, what about volume? How is it going to make the move up without the volume? And the truth is, when you're in an accumulation zone, when you're in an accumulation area, a real one, your bigger players basically have most of the supply, the supply that's going to go out onto the market, the loose supply, right? You've got retail that's going to hold, but the retail that's going to sell, whether they're just scared, don't know what they're doing, or whether they're traders, that supply is diminished a lot by the time you're kind of moving your way through that accumulation. So it doesn't need an expansive move of volume throughout the whole way here for price to go up, because retail just doesn't have the supply to throw in and stop it as it goes.
Yeah.
And so again, you get these pullbacks, you get these large wicks at the bottom, large spike there, and then you get the large movement up, and that's just your bigger players kind of pushing in there. Retail can't do anything to stop it. And so, volume and price action, if you understand what you're doing, more times than not, you're going to be a lot more correct than wrong. And it just adds so much to whatever other way you're trading with that. So I would definitely agree with that.
So what's your thoughts right now? Of course, everybody that's holding alts, and people that hold alts aren't stupid, I think, at all. I think I think a lot of people that are primarily only in alts, especially if they hold no Bitcoin and it's only alts. And I've been that guy before, so I'm not hating on anybody, but I think there's this holding on of hope to the explosive altcoin seasons that have happened in the past. But, you know, we're seeing dominance right now in Bitcoin kind of, you know, breaking a little bit of a trend to the upside. Do you see a higher, more or less likely event in the next, let's say, through November? Do you think the capital flow is going to be primarily Bitcoin focused? Do you think it's, or even beyond that, do you think capital flow is going to be primarily Bitcoin focused until the spot ETFs are approved? Or do you think it's kind of a non sequitur right now? Everything's just kind of on pins and needles. Everything's trying to find its footing.
I think, you know, I think at the end of the day, you know, especially if what I'm thinking is correct here, and we've got accumulation going on here, I think most of your money sticks with, you know, Bitcoin and a few, you know, and the bigger alts, really. I mean, you know, you got Ethereum, stuff like that. And, you know, if you're holding micros or those mini caps, I mean, it's hard during this time because, you know, when you pump, but until then, you know, you're sucking wind. It's moving, you know, just as great in the other direction.
Well, no,
so
but,
right now,
but also with that, you know, everybody wants to think every altcoin out there follows exactly the path of Bitcoin. And when things are questionable, micro caps will follow Bitcoin down, but they will not follow it up if things are still questionable.
Yeah. And I'm a big proponent. I don't trade a lot of the really small stuff at all. As a matter of fact, I pretty much stick with the majors, just because, you know, me doing it for so long, it's all about liquidity. So, you know, I basically stick with the bigger the bigger coins myself. But exactly what you said there, you know, the smaller you're getting with those coins, and let's face it, people do it because they want to get rich overnight. You know, I come in most recently from Forex in 2017, came into, you know, crypto, and there were so many similarities between Forex and crypto in terms of leverage, in terms of, you know, people coming in, they're going to get rich overnight. A lot of that same mentality came in, but crypto just makes it even easier to kind of get sucked into it because there's such volatile moves. But yeah, the smaller that cap, you know, the more you've really got to be careful with it, guys. Nobody ever lost money taking profit. Don't think you're going to get rich, you know, in a week or a month, you know, trading some really micro cap or whatever. Very few people actually make any real profits on that. I mean, like significant that they, you know, that they kind of want to get.
Well, you know, here's the deal. Most of the people that do make that money, and you've heard your friend talk about it, or you've seen the news article, they're talking about the dollar amount that it was at its highest point. If you ask 99% of those people, they're probably back to being underwater or back near break even. And because people forget to take profits. You know, if you're 100% up, I don't care what it is. If you're 100% up on if you don't have a broad strategy, if you're 100% up on anything, it'd be silly not to take. I mean, this is actually even nonsensical to say. It'd be silly not to take at least 25% profit. In reality, you should probably take 50 to 75% profit, let the rest ride, and then you have this other bag to allocate wherever you want.
Yeah, no, exactly. You know, that's what I teach every day, day in and out. You know, you're not going to lose money taking profits. You know, it might go up higher, but guess what? For most people, they wouldn't have taken profits, like you just said, when it gets up there. You know, you get greedy, you start thinking, oh my gosh, it could go up. I can buy my island next week. I think islands are the big thing now. Lambos, you know, used to be, I think they're islands now. But the reality is, even if you were to hold on, it was to go up there significantly. Most people, 90+%, will never take profits up there anyway. And it's going to turn and come back at you just as fast as it rallied up, if not faster. And you're going to blink and all of a sudden you're going to be stuck below. And so then there becomes an emotional, psychological pull on you because in your mind, you were up, you know, 15,000%. And the next day you're only up 4,000%. And you're like, oh man. And so you kind of stick on what you didn't lock in rather than concentrate on still the fact you're up. And so then you still don't take profit and it keeps going against you. And next thing you know, for most people, they don't even get out when they're break even. They'll get out at a loss after they've had a good rally. And emotionally, you know, psychologically, that's going to take a huge toll on you as a trader. And it's going to make it really difficult because you're going to start revenge trading or you're going to start not trusting yourself and all these reasons that you are going to have difficulty actually continuing to trade. Treat trading like a business. Give it specific hours during the day, specific days during the week you're going to trade. If it's not that time to trade, stop looking at your phone, whatever. You got to get away from it. There's just so many things we can do to make life better for ourselves. And as human beings, we tend to make it worse.
Yeah.
And it's unfortunate. It happens all the time though, but the
and,
odds are, guys.
And people say things like, of course it went down when I bought. It always does that. And I've said it to myself before, and I started realizing the market is not there out to get me. The market's out to get every single body that doesn't have a plan. If it's always going against you, then what's really going against you is your lack of strategy or acknowledgement that the mechanisms in which are engaging you to trade are flawed, and fix those. Because if you're 100%. Always buying and it drops, that means that you're always buying a hype, not a fundamental change. So, but hey,
100%, man.
Chris, before we go, we got about 5 or 10 minutes left. Are you down to do a turbo TA section?
Yeah, we can check some out. Sure, we'll see what we got.
I'll give you 3 coins. Let's do Ethereum. Let's do Cardano, and then maybe Solana. Do a little turbo TA section the last bit. Everybody out there, while he's pulling those up, I just want to shout out. These are the charts. I have those up in the background. Make sure you're heading over to @TX West Capital. Give him a follow. He's got just so much good information. He's been on my Twitter Spaces, Crypto Answered, a number of times. Really smart individual. And if you haven't yet, follow BitLab Academy here at Academy BitLab. Then, of course, you can follow my page as well, which is right here, if I can get to it, right here at Kelly Kellam. Again, I only call these out, not because I want my following to be bigger, but more specifically because I want to prevent people from losing money to scams with all these fake profiles for any of us that are up here doing content. So, and again, if you're watching anywhere else, make sure you head over to the youtube.com/@BitLab Academy. And everybody right now, hit that like button, hit that subscribe button, ding the bell. We're going to wrap this out the last 5 or 10 minutes with some Turbo TA with the man, the myth, the legend, Mr. TX West Capital. Thank you for coming on, my friend.
Yeah, here we go. So first thing, we kind of keep it simple here on Ethereum. And I put this chart up on Twitter before. Basically, we've got this potential kind of barrier triangle looking thing here where you've got this resistance right above the weekly pivot right here that's been holding us in check. That's kind of like that 1990 to, I don't even know what that is, about 2150 kind of area. And so we've got higher lows into that resistance. We've got volume dropping off, which is, usually what we're getting as we work toward consolidation, which gives us a big push. So locally, we have this descending channel. Looks like we got a throw under here, and then we pull back again one more time to it. So, we've got small little candles, little dojis. We got volume kind of dropping off. We want to see if we can get a bounce in this area, because if we can break out above, above this swing high over here around 2140 or so, based on the height of this, you're looking for a target up here at around 5,200. So, that kind of gets you around that all-time high, right? So, Ethereum, again, higher volume nodes are right there. We got a lower volume node here. We could see it potentially pop on down here to 14.5 or something, hit that low volume node and then take off. But we just want to see, can we get this rally back up through this descending resistance, get us up there around 1900 and some change, pop us out above that weekly pivot impulsively. Again, large candle spread, large volume. And then I think it's off to the races at that point there for Ethereum. Let me see here. Let me jump on Sol real quick here, and then we'll jump on Cardano. Sol, this was a lot of fun. I was on the Wendy show back on the 30th December last year. Talked about buying it right here, gave us a $15 target. It hit 15, and I said, when we hit 15, we'll probably go to 30. Eventually, we did hit that 32. We pulled back. We've got an interesting look of a wedge here. Again, I don't pay attention to narratives and news and whatnot. I just kind of look at the charts. Looks like we've got a 1 and a 2 on a pullback after a 1 and a 2. Locally, it's only about a 65% pullback. We could get 78.6 down here at 15.5. Give us a little dip right below the range low there. But really, I'm looking to see if we can get some traction off this area we're at. We're at that daily S1 pivot. If we can break out above this descending resistance, I'm interested in the daily pivot at 21.5. If we can get an impulsive breakout above that, I think we head up. I've got a wave 3 target up there around 78.25.
So I gotta ask you though, because you said you don't pay too much mind to narratives, but I'm sure this is crossed your eyeballs at some point in the last 2 days. with the immense potential selling pressure that could come from FTX if they were to liquidate, I think it's like $1.5 or $1.6 billion worth of Solana. Do you think that's something that you're taking into consideration at all? Or do you think because of that asset, and man, they've been mired with so much stuff over the last year and a half, do you think that there's going to be more likelihood some sort of saving grace that comes in and buys that, if that were to be liquidated, buys at OTC and prevents selling pressure on spot markets?
Yeah. So again, I'm a technical trader. I'm not a fundamentals trader. If I have any fundamental narratives, it's usually because I back in from the technical charts. So again, I don't even really worry about it at all. Looking at that information, I mean, I think they're limited to like 200 million at a time that they can sell. So it's not even like the whole 1 point whatever would be sold. On top of that, I believe there's vested dates in there. So they can only sell so much. They can only, there's time, a couple of different periods before things actually get fully vested that they can sell them. So, I don't think it's anywhere near that much that would come on, even if it were to do it. And, again, if the market, if the bear market is done, if the bottom's in and we're going up, then there's going to be buyers for that. I think I even saw Justin Sun talking about he wanted to make an offer on some of that stuff. So, I mean, you got people with deep pockets who understand markets and cycles. And, if they believe this is a bottom here, they're going to put that money in there and grab that up. And, they're not retail traders, right? So I could be wrong on this. And if I am, I've got my invalidation level, so it's not a problem. I mean, if we're breaking down below this, this wave 2 swing low here at whatever that is there, around $12.80. I mean, that invalidates what I have here. As far as this particular the structure goes. So, but if we break out higher, and we start, again, through the descending resistance and that daily pivot, well, then all of a sudden we start looking up there.
And let's be honest, in crypto, some of the most eventful moves are when everybody thinks it's not possible and it's going to go the other way. So great analysis there. Let's wrap it up with the fan favorite, Cardano. And I'm curious to see what levels. I'm curious to see what levels you're looking at. I know I called out a couple levels earlier today on the show. Curious to see if we got a similar mind here.
Let me just give me 1 second. Pull it up. I guess I got the wrong chart here. Let's pull it up here. All right.
And if you haven't yet, everybody hit that like button, hit that subscribe button, ding the bell. Join us here if you're not. I know we still have about 55% of everybody that's watching on a daily basis. I cannot believe it. Watching on a daily basis and not subscribed. So hit that subscribe button, join the family. We got a wonderful crew here, having wonderful guests on like Mr. Chris here. And thank you again for being here, Chris, and taking us through all this TA.
I appreciate that, man. Obviously, it's a great time to be here with you guys. Again, I'm looking at this as a 1 and a 2 on a pullback. We're just beyond the 78.6. But once again, same thing. You've got that descending resistance. We've got this range we're kind of in here. If we can break out through this, it's the mid-range, it's the hourly pivot, kind of that 25-cent level. If we can do that, I'm looking at the daily pivot right up around 27 cents almost. And again, looking for that impulsive breakout above there. If we can get that, my next target is 33.3 cents up here. And if we're doing that, I'm looking up at 56, almost 57 cents. Minimum expected wave 3 target heading up there, which gets us above on this big old count here. If this, again, if this whole count is correct, we've got this triangle resistance here at 52.42. If we do that, again, the count's correct, then we should be breaking out, above just based on, counting it. But, again, it seems like it's a far way off. We've got bullish divergence coming up here. We just had a bullish cross and we're trying to break out of Stoke RSI here on the daily. So a lot of things setting up for a potential reversal from here. But at the end of the day, like those other ones, you have to get through these levels. You can't just go, okay, I'm going to buy here and hope it goes up. I talked about earlier, validation levels. You want to have the steps you go along the way. So, listen, do I want to take some profit? Do I want to stay in this trade? Depending on whether or not you break through them and how you break through them. But once you start doing that locally here, then those targets become wider off and all of a sudden the bigger picture kind of comes in there. But
so
yeah, I mean, right now we're still kind of sticking up.
What do you see for if we get some sort of, which we've seen, let's be honest, in the last 2 years, it's been a rude awakening for people. After 2017, people had the hopium, that's when I would say 2016, 2017, that's when the start of crypto started to broadly enter the base level of the zeitgeist. And then we had the run up in post COVID that was just phenomenal as well. It's a bit truncated, in my opinion, from the Chinese mining ban. But and then the secondary top is 69K. And people seem to think it's like a drug. Bitcoin and crypto is like a drug. They see that price action, and every time there's a dip, people get lost in this idea, buy the dip. Now, there's certain dips you buy and certain ones you don't. And again, it all depends on your strategy. So if we get something that does drop markets just broadly, where do you see any potential downside targets for Cardano going?
Yeah, so let me go ahead and pull up the weekly here. So as you can see, we've got this weekly pivot whip. This big picture, I want to get above this 71 cent area. If we can do that impulsively, even though we're getting toward the end of the year, so we're getting new pivots come in, but that should really kind of suggest the move's heading upward, right? But if we're breaking down, I'd be looking down here, maybe 12 and a half almost, 12.65. And I've got another one here, maybe even around 8 cents. If we were to continue that breakdown, those would probably be the next two kind of areas I would look at. But, here on the weekly, we've almost reset down and oversold on RSI. Stoke RSI already is. So we're on that daily kind of S1 pivot. I want to see if we can get some rally up off here and head up. But again, if we can't, it kind of moves us down into this 12, 13 cent area. And then
that's the exact same level I was saying, man. And you know what? Some people want to be upset at that because they held from a higher point. But at the end of the day, even if you have an asset that you bought at a much higher level, if you can't see lower prices as opportunity for an asset you're holding, then one, you probably don't believe in the fundamentals. And two, you're not understanding how markets work. If you buy somewhere and you were unable to get out of position and you're willing to hold it in the red, that's fine. But don't get mad that price goes lower. That's an opportunity. You potentially lower your average entry, or maybe a friend or family member, that you're like, hey man, I was an idiot. I bought Cardano at $2.38, and I've been holding it, but it's getting back to 12 cents. And look at all this stuff they're building and developing. Prices are opportunities for people that have strategy.
That's exactly it, man. At the end of the day, it's do you have a system or a plan? Everybody when they're new, every trade is its own trade. Every trade is new. What you find out as you become more well-versed as a trader is that systems and just about everything in life, systems over the event. You start creating a system of how you trade, specific things that you look for to enter, to exit, stuff like that. And then, that ends up working for you over time. You're going to make some losses along the way. It's all part of it. That's why that proper risk management is so important. But, again, the longer you're actually a trader and when you get to where you're consistently profitable over time, the more likely you have developed a system rather than attacking each trade individually. And so like you were talking there, instead of getting caught in holding for a long time or buying every time, this little movement happens, or selling every time this little movement happens, you have a system of which that you're actually looking for certain things to happen. And then that just kind of sets you up for a lot more success than what you have as a new trader. There's a lot you have to learn as a new trader. Most of it's emotion-based.
Yeah, absolutely. Hey, Chris, I appreciate you being on here so much. We're going to have to make this a regular thing. Everybody in the comments right now, throw a 1 in chat if you want to see Chris back here. I'm sure I could twist his arm and get him back involved. And again, I appreciate your entire, the way you articulate your thoughts is a big thing, especially with where we're at in this space right now, because if people can articulate clearly and make it engaging, it does a huge service to getting more people excited about being involved in education. Because at the end of this day, let's be honest, is making money fun? Yes. I'll tell you right now, Chris will tell you right now, the process of making money is not fun at all. The process of trading, there's nothing fun about trading until you're a pro. And then the only difference when you're a pro, when you're making a living at it, is it's still, I don't want to say sucks, it's still every one of those emotions, fear, hope, greed. It's in you in every decision you make. But you've learned to build systems and strategies and parameters and bumper zones to keep you in check. Because if you don't know thyself, then the market will know your capital because it will take it from you. So with that being said, Chris, anything else you wanted to say? Any other links people should check out to find you?
You know, they can jump over to my Twitter there at TX West Capital. We're moving everything. We've had a few different sites. We're moving everything under one roof now. Soon, TexasWestCapital.com.
Yeah, and your links are also on. If you head over to his Twitter page, he's got links up here at the top too. Make sure you give him a follow there, and then of course make sure you're following BitLab Academy and myself. This is at Academy BitLab and myself, and I just wanted to also shout out everybody. Make sure you head over to, if you're not involved with our Discord yet, we have the paid area and all that, but we also have a free section. But Alex is going to be hosting an event here shortly after this is over. In fact, it might be starting here in a moment. But yeah, so it's just come in here to the Discord and you'll see here at the top event, click on that and that's where you find out. But we have so much stuff in our Discord with charts and calls and ideas and little competitions and so much involved in our community. So with that being said, if you do want any of the stuff that we offer, the courses, the indicators, all this stuff, you can still use this coupon code, give me 30. So everybody get on that. And again, Chris, thank you for being here. I really appreciate you. And again, we're going to have to do it again sometime.
Definitely, man. I appreciate it.
All right. Adios, my friend. Adios, muchachos. Everybody hit that like button.